Welcome back to Return My Capital. Today we're going to take a look at DGRO, which is a popular dividend-focused, dividend growth-focused ETF from iShares. We see over the past year it's trading up about 5.3%. On the 5-year, nearly 84%, and on the 10-year, an impressive 133%, trading in about the middle of the 52-week range with 55 on the low end. Today it's 61 and then 65 per share on the high end. A real nice 0.08% expense ratio. We're also going to compare DGRO to VYM, SCHD, and VIG here in just a moment. Quarterly dividend payer, pays an annual dividend of $1.39. We're going to go ahead and come down here to the returns compared to the S&P 500 on a total return perspective. It is lagging the S&P 500 on the 1 year, or excuse me, it is actually over the S&P 500 on the 1 year by 0.1%. On the 3 year, it is underperforming the S&P 500 about 5%. And on the 5 year, DGRO compared to the S&P 500, it's trailing about 24%. And then on the 10 year, let's say nearly 30%. In terms of sector breakdown for DGRO here, financials does hold the highest weighting, perhaps not unexpected for many dividend-focused ETFs as financial companies. I don't want to say every single one of them, but nearly all do pay a consistent dividend until you hit a financial crisis like 2008, let's say. But in terms of sector weighting, the second would be technology at 18%. Financials are the top holding at 22%. So technology followed by healthcare at 16.5%. Consumer defensive, so think your staples, 11%, industrials at 10.3%, utilities 6.5%. So utilities have a much higher weighting in this ETF as they would in, say, a more broad market diversified ETF, something like a VTI or a VU or a Spider. I don't know why I said Spider. SPDR. Whatever. Moving along here. Consumer cyclical 6%. Energy 5.3%, so not too high of an energy weighting for especially a dividend-focused ETF. Basic materials 2.5%. Materials typically don't get a whole lot of love. Communication 1.3%, and then 0.01% real estate. I'd be curious to know why. I wonder if DGRO holds a REIT or if that's some sort of cash equities. I don't know. Top 10 holdings here, and I'll actually expand upon this in just a moment. JP Morgan Chase is the highest weighted holding, single individual holding, 3.1%, followed by ExxonMobil, just over 3%, barely more than Microsoft at just over 3%, Apple, J&J, Johnson & Johnson, AbbVie, Broadcom, Procter & Gamble, Home Depot, and CME Group, which I believe, let me check it, CME Group. I want to say this is an energy stock, or no, this is a financial, right? Let's see. Yeah, CME, I think that might be, I think CME is based on the Chicago Mercantile Exchange. But anyway, it's a financial. Real quick here, I want to shift over to the actual DGRO profile on the iShares site. So we just covered the top 10 holdings. I'm just going to go a little bit deeper. Holding 11 through 20. These are holdings that still have a weighting over 1%. Actually, United Health here coming in at 11 is nearly 2% weighted, followed by Merck, Coca-Cola, Bank of America, Pepsi, Cisco Systems, IBM, McDonald's, Amgen, and Comcast. So those are 11 through 20. 21 through 30, you've got Eli Lilly, Morgan Stanley, Citigroup, NextEra Energy. It's a kind of a high growth, or at least it was. I haven't been tracking it, but kind of a high growth utility. And Visa. So Visa would make your 25th holding. And that is the last holding with a weighting of 1% or greater. Visa is actually 1% on the nose, on the dot. Followed by ConocoPhillips, Abbott Laboratories, Goldman Sachs, Qualcomm, Gilead. And then we'll just do holdings 31 through 40 here. You've got Walmart checking in at 31, Accenture, RTX, Medtronic, Duke, US Bank Corp, Union Pacific, Southern, BlackRock, and Honeywell. So just wanted to show a few more of the top holdings. There are 416 total holdings in this ETF, so a substantial amount of holdings. The top 10 that we had previously covered only make up 26%. So again, we'll see how that compares to a couple other dividend-focused ETFs here in just a moment. Again, dividend yield 2.27% on DGRO here. So it is its stated goal is to focus on dividend growth. And you'll see that represented here with the 5-year CAGR of 7.62%. The last dividend was paid out on March 21st, so just over a week ago, and that was 31 cents per share. And I want to compare DGRO here briefly to a couple other popular dividend-focused ETFs, and we're going to compare these based on total return. So what I'm showing here is a comparison of DGRO VYM, it's the Vanguard High Yield Dividend ETF, SCHD, so that's the higher yielding, higher growth, very popular dividend ETF from Schwab, and then VIG, which is the Vanguard Dividend Growth or Dividend Appreciation ETF. So you'll see those listed here. And then for total return over the past year, the top performing ETF of these four is actually VYM, and that surprised me because the last time I looked at VYM, it was significantly underperforming these. But you've got VYM followed by DGRO, VIG, and SCHD. I'll pull up an Excel sheet here in just a moment, and we'll break these down. On the 3-year, VIG is the top performer, and actually SCHD is the bottom performer on the 3-year chart. Over the past 5 years, pretty tight grouping here, but SCHD is the top performer, standing out from the crowd. Over the last 5 years, VIG is the bottom performer on the 5-year. That's interesting. I think VIG was the top. Yeah, VIG was the top performer for the past 3 years and the bottom performer for the last 5. And then we'll just quickly on the 10-year chart here, SCHD is the top performer, or excuse me, DGRO is the top performer over the last 10 years, and VYM is significantly lagging the other 3 over the full 10-year chart. Let's go ahead and quickly look at this comparison. So I broke all 4 of these down based on expense ratio, price to earnings, holdings. We'll go through all these right now. So starting from the top here, you've got DGRO, SCHD, VYM, and VIG. Expense ratios are all extremely minimal, very, very favorable for long-term expenses. DGRO does have the highest expense ratio at 0.08, SCHD and VYM at 0.06, and VIG is actually the lowest at 0.05. Vanguard's always going to try and be the lowest from an expense ratio perspective. That's their calling card, but all 4 are great. For the average price to earnings ratio of each ETF's holdings, DGRO is the high. Actually, I take that back. VIG is the highest at 25.3%. So pretty elevated for a dividend-focused ETF. DGRO is the second highest at 21.25. SCHD is the lowest at 17.74 price to earnings ratio of the 4. Total holdings of each ETF, again, DGRO has 416 total holdings. VYM actually has the most with 532, and SCHD has the fewest with 104. So for both the total amount of holdings as well as the top 10 holdings, the top 10 individual holdings within each ETF, that percentage weighting for the full ETF, I didn't put a green highlight for the best or the worst because it's just individual preference, right? If you want something that's more concentrated, focused on what you perceive to be better performing companies, companies that you actually want to own through these ETFs, or if you want something more diversified through a greater amount of holdings, that's entirely preference. But DGRO 416, SCHD 104, VYM 532, and VIG with 340. That top 10 weighting for DGRO is 26%, which is the lowest, tied with VYM. Unsurprisingly, those two ETFs do have, you're looking at it as you see, do have the most holdings. SCHD is the most concentrated, which again is not a surprise. SCHD only has 104 total holdings in that ETF, and the top 10 companies in SCHD make up 40% of the ETF. So quite concentrated for SCHD. Now, looking at the dividend yield, DGRO is 2.27%. SCHD is the highest at 3.77%. And VIG is the lowest at 1.85%. So really VIG, not significantly greater dividend yield than if you had purchased a total market index fund. So take that for what it's worth. 5-year dividend CAGR, so looking at dividend growth here, DGRO 7.62%. The highest is SCHD at 11.44%. And that's closely followed by VIG at 11.08%. VYM the lowest by quite a large margin at 1.67%. So it's kind of interesting to see that SCHD does have the highest dividend yield and the highest 5-year dividend CAGR, and VYM with, almost a full percentage point less on the dividend yield and essentially zero dividend growth over the last 5 years, not even 2%. Moving on just to those total returns that we saw the charts of, highlighted in green are the top performer over those time periods. Kind of interesting that it played out where each of the four were leading over one of the time periods. But again, over the last year, VYM is the top performer, 8.5%, let's say. Over the last 3 years, VIG is the top performer at 25%. Over the last 5 years, SCHD is the top performer at 115%. And over the last decade, DGRO is the top performer at 195%. So just kind of wanted to have some fun with this today. Quickly run through DGRO. You can see the metrics of these four very common, very popular dividend-focused ETFs, how it kind of breaks down. It's primarily based off of your goals, your preference. All of them have low expense ratios. So hope this quick little deep dive on DGRO and the others in the comparison was fun, enjoyable for you, learned a little something, hopefully. If you enjoyed it, please give me a like, subscribe if you want to see more content like this. But thank you very much for watching. Take care. Bye-bye.